start of a bull market run, or is it a bull market trap? In this video, I'll be sharing with you my thoughts about the stock market and how I analyze the stock market to arrive at my conclusion. Make sure you stick to the end of the video if you want to learn how I analyze the stock market during this period and my trading strategy. Alright, so let's begin. So is it a bull market trap? Let's take a look. Right, so the first thing that we are going to take a look is a bear market, right? So what is the definition of a bear market? So the official definition of a bear market is when prices fall by 20% or more, right? So if you take a look at the stock market, the high was around the 19th of February 2020. So that was the high for the year. So it was at this point, right? So the high was 339.08. So it fell all the way down to this level, right? So how much did it fall exactly? It fell by 35.7%, right? So 35.7% is more than 20%. So we classify this as a bear market. After the huge decline of 35.7%, you can see that in the past couple of days and past week and a half, prices have actually increased over time. Now that we know the official definition of a bear market, let's take a look at the definition of a bull market, right? So a bull market, we classify it as a bull market when prices rise by 20% or more. From the lows of this candlestick here to the high of this one, prices increased by 27.6%. So according to the official definition, when prices increase by 20% or more, we say that the market is in a bull market, right? So we are in a bull market, but are we really at the start of a bull market run, or is it a bull market trap? So that is what we are going to cover in today's video. Alright, let's take a look at some of the major news that happened during this bull market, right? So let's take a look. The first one was on April 2nd, the jobless claim was 6.6 million. And the next day, on April 3rd, CNBC released another news that's saying that US payroll plunged by 701,000 in March amid the start of a job market collapse, right? So it mentions that since the start of October 2010, jobs have been growing month by month all the way until February. But in March 2020, it finally broke the streak. So the streak finally broke after nine plus years. So the streak was broken in March, right? So in midst of all this bad news, like the US weekly jobless claim doubled to 6.6 million and the March job losses breaking the growth streak, prices have actually continued to rise, right? So what does this mean for the stock market? Are we really back into the start of a proper bull market run, or is this just a temporary bull market, right? So let's take a look. Okay, so before we continue, I'd like to share with you how the stock market moves. So I'm going to show you a graphical illustration of how the stock market typically moves, right? So in an uptrend, or when the market is going up, or in a bull market, what happens to prices? Prices does not go up in a straight line. So what it does instead is it goes up, then goes down, goes up, goes down, goes up, goes down, and so on and so forth, right? So that is how prices tend to move in a typical bull market. And how does prices move in a typical bear market? Let's take a look. So again, for a bear market, prices do not fall in a straight line. Instead, it goes down, goes up, goes down, goes up, goes down, and so on and so forth, right? So that is how prices move in a bear market. So taking a look at this graphical illustration, where do I believe we are in currently in the stock market, right? So where I believe we are in is at this point here, okay? I believe we are at this point here, right? So this point, I'm going to color it in red. So I believe we are at this point here. So like I mentioned, when prices fall, prices do not fall in a straight line. So the prices tend to fall and then bounce back up. So this bounce back up, we call it a bull market rally, right? So a bull market rally is when prices in a bear market, it rise for a while, and then after that, it tends to fall back down. So that is where I believe we are in right now. I believe we are in a bull market trap. The first reason why I believe that we are in a bull market trap is because, like I mentioned earlier on, when prices fall in a bear market, prices do not fall in a straight line. It will tend to rally up a bit, right? So taking a look at this article by Investopedia, it mentions that since the beginning of the 20th century, every bear market has spawned at least one rally of 5% or more before the market corrects. And 2/3 of the 21 bear markets that occurred between 1901 and 2015 experienced rallies of 10% or more. So right now, I believe we are experiencing one of these kind of rallies. The second reason why I believe that this is a bull market trap has to do with this crash phase, right? In every major crash or in every major bear market, there is always a crash phase. So what do I mean by crash phase, right? A crash phase in a bear market or in a recession is where prices experience its largest drop in terms of prices in that recession or bear market, right? So you can see that for the 2008 crash, there was this crash phase, so where prices declined the most in that recession. So it was this part. And then for the 1987 crash, it was at this part here. And then for the 1929 crash, it was here. And then the 2020 crash was here, right? So that is the different crash phase of the major recessions in the past and major bear markets in the past. Now that we know that there are crash phase in every bear market and recession, the next thing I did was to look at the past two major recession and bear market and analyze their crash phase and their rally during that period. So what do I mean by that? Let's take a look. The first bear market and recession that I took a look at was the dot-com bubble, right? So the dot-com bubble happened around 2000 and 2001, right? So you can see here on the chart, it was on the 2001. And this was the crash phase of the dot-com bubble where prices declined the most during that recession, right? So can you see that prices declined by a lot during this crash phase period of the dot-com bubble? So how much did prices exactly decline by, right? So I take the highs of prices at this point and taking the lows, I calculated the figure to be negative 34.1%. This means that prices fell by 34.1% from the high at this point to the low of this point, right? Then the next thing I take a look at was the rally after the crash phase, right? So the rally after the crash phase was when prices fell by a lot. So this was the crash phase. Then what I take a look at next was the rally here, right? So this rally, I calculated it to be 25%. So prices from the low of here to the high of this one, it increases by roughly 25%. So that was for the dot-com bubble. The next recession and bear market that I took a look at was the great financial crisis, right, in 2008. So can you see that here was in 2007 and 2008? So this was the financial crisis, right? So again, I took a look at the crash phase period of the financial crisis. So the crash phase was this part. So this was the part where prices declined by the most during that recession. So it declined the most here, right? So from here to here. So again, I wanted to calculate how much prices declined by during this crash phase. So I took the high and took the low, and I figured that prices declined by 36%. And the next thing I took a look at was, again, to take a look at the rally. So how much did prices rally immediately after the crash phase of the recession and the bear market in 2008? So I calculated the lows here and the highs here. It shows that prices increased by 20.1%, right? So prices increased 20.1%. So do you notice something? Let's go back to the first recession and bear market that I analyzed in the previous slide. So it was the dot-com bubble crash, right? So the dot-com bubble crash. So can you see that the crash phase, prices fell by 34.1%. And immediately after that, how much did prices increase by or rose by? It rose by 25%. So during this period, we also can say that the market was in a bull market, right? Why can we say that? Because remember, the definition of a bull market is when prices increase by 20% or more. So in this case, it increases by 25%. So this rally, it was a bull market. But as you can see after that, from the temporary bull market rally, prices fell back down, right? So now looking back, we can say that that bull market rally was actually a temporary bull market rally, and it was actually a bull market trap, right? So can you see that after prices increased by 25%, it declined back to the lows of this price here, right? So it declined all the way back. And then let's take a look at the great financial crisis. So can you see that similar to the dot-com bubble crash, during the crash phase period, prices declined by 36%. And the rally immediately after the crash phase, prices rose by 20.1%. So again, that was a bull market rally, right? Because why do we say there is a bull market rally? Again, going back to the definition, a bull market is when prices increase by 20% or more. So in this case, prices increased by 20.1%. So this was a bull market rally. But looking back again, we can tell that this bull market rally was temporary, and it was a bull market trap, right? Because it was a bull market trap because after that, it rose and prices fell back down, right? So that was a bull market trap. So now we are in 2020. So let's take a look at how prices are playing out currently, right? So we take the high at this point here and take the low. So this was the crash phase period of the 2020 market crash, right? So prices declined by 35.6%. So after this crash phase of the bear market, how much did prices increase during this bull market rally, right? So calculating it increased by 27.7%. So similar for the previous two major bear market and recession, prices is currently in a bull market rally, right? Because it's above 20%, right? And that is why I believe we are in a bull market trap. Because if you take a look at the previous two bear market and the previous two recession, we can see that prices, even though prices rally immediately after a crash phase, what happens after the rally was that prices fell. So how I see things right now is that we are in a temporary bull market rally, right? And in a bull market rally, prices increased by more than 20%. And after that, the temporary bull market rally will fall back down. So that is how I believe things will play out, right? So in this crash phase, prices fell by a lot, by 35.6% to be exact. And then after that, it increased by 27.7%. So what I believe is prices are going to decline at this level to back down here, or it might actually go up to the 61.8% level and fall back down, right? So that is how I analyze the stock market, and that is why I believe this bull market is temporary and it's a bull market trap. But that being said, I believe this quote by Bruce Lee is very important and apt at this moment right now, right? So Bruce Lee said, you must be shapeless, formless like water. When you pour water in a cup, it becomes the cup. When you pour water in a bottle, it becomes the bottle. When you pour water in a teapot, it becomes the teapot. Water can drip and it can crash. Become like water, my friend. So how does this relate back to the stock market? Right now, I can have my own view that we are in a temporary bull market rally and prices are in a bull market trap. So that is my view right now. But if I see certain things in place in the stock market that tell me that I'm wrong, I'm not going to be insistent that I'm right and that market should fall, right? So what I believe is when the market shows us that we are wrong, then we adjust accordingly. So we shouldn't be fixed in our view about the stock market. Yes, we can have conviction in our analysis and our views about the stock market. But when the stock market tells us that we are wrong, then we must adjust accordingly, right? So we have to be open-minded when it comes to the stock market because no one can predict the stock market. We can only analyze the stock market with a higher probability using different indicators and using different numbers and figures, right? So that is why we must be water, right? So if the stock market tells us that it's this way, then we flow with this way. If the stock market tells us that it's a different way, then we flow a different way. So we need to become like water, my friend. When prices reach a certain point and prices tell me that, okay, this is not a temporary bull market rally, but it's actually a start of a long-term bull market rally, then I will switch my strategy accordingly. So which level am I looking at that give me the confirmation that, okay, I'm wrong and that the stock market is actually on a start of a bull market run? So the level that I'm looking at is the 61.8% Fibonacci level. In technical analysis, Fibonacci levels are very important to help us determine the retracement levels of prices. So the retracement levels of the rallies in a bear market and the retracement levels in a bull market. In this case, I use the Fibonacci level to help me determine the retracement levels of prices, right? So the 61.8% level is very important because in a retracement, prices tend to reach between the 38.2% level to the 61.8% level. That's typically where prices will reach in a retracement before continuing its trend, right? So in the case of a bear market, prices tend to reach either the 38.2% level, 50% level, or 61.8% level before it goes back down and continue the trend. So a retracement or a temporary rally in a existing trend typically does not break beyond the 61.8% level. So if prices do break beyond the 61.8% level, then it is no longer a retracement or temporary rally. It is the start of a new trend. And that is why I am looking at a 61.8% level very closely to see how prices play out. So right now, today is Tuesday. So I'm filming this video on Tuesday and I'm going to upload it on Thursday. So right now, prices have actually encountered resistance at the 50% level. Let's say during these 2 days, prices break out of this 50% level and also break out of the 61.8% level, which is unlikely, then and only then will I be bullish about the stock market. If you have learned something from this video and you have liked the video, make sure you smash that like button and subscribe to my channel, because each week I release one new video about the stock market, be it in investing or trading. So I hope you guys have learned something to your financial success.